Kim Anderson, our crop marketing specialist, joins us now. Kim, commodity prices have been declining. A lot of people talking about it. Let's start with some analysis of what's been going on.
Well, you look at the commodity prices, you're talking about the metals, you're talking about oil, fuel, you're talking about the agriculture. All commodities have essentially been off the last couple of weeks. I think part of that is because the increased value of the dollar. We've had probably a 2% increase over the last week. You go over the last couple of months, you've probably had a 4 or 5% increase. And then you look at wheat prices, you know, they knocked off a dollar and a dime there. You look at corn prices, they were down about 30 cents. They recovered a little bit, and soybean prices down $2.20.
Let's dig into wheat a little bit more. It was at $6, now it's below $5. Why is that?
I think we got priced out of the world market. We got that big rally to get that up there, the cash price near $6. You look at what's going on with the Black Sea market, essentially Russian exports. They sold wheat and delivered wheat into Egypt this last week for right at $7. Now you back that off to the Texas Gulf, you're around $6.10, something like that, $6.10. And so you bring it back to the interior, probably got to take another dollar off that. So you're down around $5.10, $5.20 just to match the Russian price. And so I think we got overpriced in the world market, and we saw some adjustments on that price.
Speaking of the world market, what's the latest with the U.S. and China in terms of trade?
Well, there was a report out this week that said a Chinese delegation will be coming to Washington to visit about the spat, is what I like to call it, rather than a war. And if you look down at some specifics for soybeans, and that's the big ag commodity we're talking about. Now the trade war is not over. Bean is a casualty of the war or the spat. But let's look at we've had a $2 decline in the price of beans. If you look at world production, 13.5 billion bushels, that's a record by 750 million bushels. The 5-year average is 11.8 billion bushels. So that's world production. You look at world ending stocks, 3.9 billion bushels. The average is 3 billion bushels. That's a record 3.9. If you look at U.S., a record U.S. soybean crop, 4.6 billion bushels. The average is 3.9 billion. You look at U.S. ending stocks, 784 million bushels. The average is 242 million bushels. It was 430 last year. You can't have that high production, increase stocks that much, and not have a decline in prices. Yes, the trade spats had a negative impact on soybean prices, but a good part of this is shooting yourself in the foot by increasing production. It's not just in the United States. We've seen massive increases in production in Brazil, and probably will continue to see that, and that increases competition and that lowers price.
Is it a good idea to have kind of your arms wrapped around this when you're an Oklahoma producer starting to think about planting time?
You bet. And you're looking at wheat, you've got wheat prices up near the cost of production or slightly above that if you look at the forward contract, depending on what your yields is and your cost of production. If you look at corn prices and bean prices, the massive stocks that we're looking at carry into the 19 crop, might be a year to take a good strong look at wheat rather than the summer crop.
Okay. Thanks a lot, Kim. We'll see you again soon.